Hi everyone. It's been a good quarter for South African markets, and for once we actually outperformed both the global markets and the US. And it's been a very good year for the Peregrine Capital funds. Our high growth qualified investor fund is up about 17% year to date as at the end of September, and the pure hedge squiff is up about 11.5%. So if we look at what happened the last 3 months, it was just a really great 3 months for South Africa as a whole. We had this great outcome post the election where we had the formation of the government of national unity, and so far, fortunately, things have stuck. There's obviously always small disagreements in these coalitions, but that's to be expected. The big picture is we're going in the right direction. Globally, we saw the Fed cut rates by 0.5%. First rate cut after one of the sharpest hiking cycles we've seen for a long period of time. And then South Africa followed shortly after that with a 25 basis points cut. If we look at our performance for the quarter and also for the year so far, there's been two major themes. Firstly, you know that we've been going on for 18 months about how cheap and attractively priced South African shares were, and the rally that started post-election continued in this quarter with a lot of the large SA companies continuing to re-rate as the market gets more excited about the South African economy and prospects over the next 12 to 18 months. We've taken the chance to start reducing some of the exposure to these large cap shares, and where we see value right now is still in the SA small and mid cap space. These shares initially lagged the rally in the larger companies, and pleasingly over the last kind of 4 weeks or so, we've seen them somewhat catch up to what's happened in the large cap shares, but we still think there's meaningful value in these SA small and medium sized companies. The other major theme we've seen has been the Chinese stock market. It's been an extremely unloved place since it peaked in the first part of 2021 when the CCP put a squeeze on the technology shares and the whole equity market there, and the economy's also been somewhat weak. So these shares have been very unloved. It's probably one of the largest underweights we've ever seen for global managers, for emerging market managers, for US managers. Almost nobody owns Chinese shares. So what happened during the last month or so is that China came out with a big stimulus package to stimulate the economy, but also making really positive comments on the market, saying they're encouraging companies to do share buybacks because of low valuations. So this really got the Chinese market going, and it's something I've rarely seen in my career. We've seen the Chinese tech index go up 50% in the last 2 weeks. You see this with individual companies, but for an index to do this much is quite something, and just something you're going to see only a few times every decade or so, a major index doing something like this. So the question naturally is China going to follow through on this? Are they going to double down on the stimulus given the good results it's immediately had on the markets and bringing risk appetite back into the economy? We certainly hope it will. And the interesting thing is those Chinese technology companies were just so cheap that after a 50% increase, many of them are still actually very attractively priced versus the US and global counterparts in the technology space. So our Chinese positions in the fund, mainly in the technology sector, has benefited us nicely during the month of September, and we hope it continues to do so in the fourth quarter and for the years to come. These are great businesses growing at attractive rates, and it was really the government and regulation that was holding them back. So as we head into the last quarter, I think there's two major risk events we're watching. Firstly, the US presidential election that's happening early November, something we'll watch very closely. And then secondly, the escalating conflict in the Middle East that's had some kind of new parties join the battle over the last week or two. We hope things settle down there, but if there's risks and impacts on the globe that emerge, we'll be ready to act. Fortunately, with a lot of our companies performing very well over the last 3 months, we've sold some shares and are running larger cash balances in the funds, which I think positions us very nicely for the last quarter if any of these risks materialize. So I also just want to wish all our clients and everyone watching well for the upcoming holidays. We hope you travel safely and have a good end to the year.